Interesting news on the housing market. Is this the biggest slowdown in the last decade or the biggest potential price drop since the housing crash in 2008? We'll talk about that and more coming up. My name is Andrew Finney, and I create educational real estate videos like this one to help you make well-informed home buying and selling decisions. As always, timestamps and resources are linked below in the description because I value your time and you already know why you're here. In this video, we'll break down what's happening with why Zillow is bullish on the housing market, CoreLogic's housing forecast downgrade for 2022 through 2023, what's going on with mortgage rates, they're down right now, but for how long? What the Fed says about cutting rates, housing prices, are they slowing down or falling? And MIT engineers discover a way to see inside your body. Okay, so Zillow not only disagrees with the home price correction point of view, but also thinks home prices could go up another 7.8% between now and June 2023. With already high home prices, it makes me wonder exactly who will be able to buy a house if prices keep going up. What about you? What do you think? Drop a line in the comments below. Thanks. Looking past the headline is where this gets really interesting. Zillow's home price forecast is actually a downgrade from its position earlier this year. Zillow initially said they believe home values would go up 9.7% between May 2022 and May 2023. To me, it begs the question, why did they downgrade their forecast again? This report marks Zillow's fourth consecutive month of downgrading its housing forecast. Here's what they said. According to the Zillow report, they say the downward revision comes amid a faster than expected deceleration of monthly growth on the Zillow Home Value Index, or the ZHVI for short, and a weaker outlook for home transactions. All right, let's simplify some of that real estate jargon that you're hearing because it can get a little bit confusing. Specifically the terms appreciation, depreciation, and deceleration. In a nutshell, when you hear appreciation, it means home prices increase. Depreciation is when home prices decrease, and deceleration is when home prices continue to appreciate, but at a slower pace than before. To better show how this works, let's use the numbers from the Zillow housing forecast we're talking about now. Just a moment ago, we quoted Zillow saying they believe the housing market is decelerating but will still appreciate by 9.7% by May 2023. So let's say you plan on buying a home next May for $500,000. To get an idea of how much a home might cost next May, we take the $500,000 price and multiply by 9.7% appreciation rate to find the difference in home values between now and then. That comes to $48,500. Then we add that number to $500,000, which comes to $548,500 for how much a $500,000 home today might cost in May 2023 if prices do appreciate by 9.7%, as Zillow suggests. If examples like this are helpful to you, please let me know in the comments. Thank you. Okay, so back to the Zillow report. Zillow goes on to say the forecast for existing home sales calls for 5.46 million sales in calendar year 2022. That's a 10.8% decrease from 2021. To justify the downgrade, Zillow cited concerns of a more aggressive plan from the Fed to raise the federal funds target rate, and deteriorating consumer sentiment were key concerns behind the downgrade. If that's the case, why is Zillow bullish on the housing market? It comes down to the supply of homes. We still see a shortage of homes for sale at this time, but for how long is the real question. For instance, on Realtor.com's housing market forecast update, they adjusted their projections from just a 0.3% increase of available homes for sale to 15%. That's substantial. I wonder how many more times this year we'll see housing market downgrades from real estate analysts. Time reveals all, so we'll find out sooner than later, and we'll find out together. But where do you think the housing market will be by the end of the year? Let us know in the comments. Thanks. In a break from Zillow's forecast, CoreLogic recently downgraded their forecast in their U.S. home price insights posted on August 2nd. As we can see in their report, CoreLogic indicates home prices will increase on a month-over-month basis by 0.6% between June 2022 and June 2023, and on a year-over-year basis by 4.3% for the same period. Looking beyond the numbers to what CoreLogic's deputy chief economist, Selma had to say, the plot thickens. Here's what Selma had to say. Signs of a broader slowdown in the housing market are evident as home price decelerated for the second consecutive month. This is in line with our previous expectations, and given the notable cooling of buyer demand due to higher mortgage rates and the resulting increased cost of ownership. Nevertheless, buyers still remain interested, which is keeping that market competitive, particularly for attractive homes that are properly priced. It's worth noting that both the Zillow and CoreLogic forecasts refer to the rate of home appreciation on the national level. Individual real estate markets may fare better or worse. As a case in point, scrolling down further in the same CoreLogic report, they highlight the top 5 markets at risk of a home price decline. We'll keep watching what's happening as we move forward together. One thing is for sure, if you're planning on buying or selling a home this year, you'll want to have not only a top realtor on your side, but one who knows their local market and how to help you navigate the rapidly changing real estate market. If you're planning on buying or selling a house in the Las Vegas area, let's get in touch. My contact info is below this video. If you're not in the Las Vegas real estate market and you're planning on buying or selling a house and you want some help finding not only a top realtor, but the right one for you that knows their numbers and how to safely guide you through any market condition, check out my friends at homeandmoney.com/Andrew. Let their concierge team take care of you as they get to work finding a top realtor near you to help you with what's most important to you. The link is in the description of this video. Okay, so what's going on with mortgage rates? When I published last Friday's video, we saw the prevailing 30-year fixed rate mortgage average was 5.54%, as we could see in this Fed economic data chart. Then earlier this week, when I published my last video, the same chart showed a drop to 5.3%. Well, here we are 3 days later, and the rates dropped again, this time to 4.99%. What's strange about all of this is the Fed increased the federal funds rate by 0.75% on July 27th, which generally goes hand in hand with interest rate increases on consumer loans, including a mortgage. To get to the bottom of what seems to be happening, I did some digging. What I found is there is a lot of speculation about the Fed cutting the rates over the current recessionary conditions. For instance, this CNBC post reports that a potential halt in GDP growth is why Berenberg economists expect the Fed to start cutting rates late next year. Hang on, next year? That's a long time away. So why would that impact the current rates right now? So I dug deeper. This time I came across an article by CNN that said the drop comes as surprisingly positive reports for some economic indicators counterbalance the talk of a looming recession, said George Ratu of Realtor.com's manager of economic research. Well, that's a head scratcher given what the Fed said just this last week. Quick side note, by the time you watch this, the jobs report will be out and I'll go through it and report back to you early next week. So let's look at what the Fed is saying so we can have a better idea of what to expect moving forward. Mary Daly, who is a San Francisco Fed president, was recently interviewed by John Fort of CNBC as it was streamed on LinkedIn. The link is in the description if you want to check it out. There are a couple of key things she said when asked about the Fed starting to cut rates in 2023. Mary said, "That's a puzzle to me. I don't know where they find that in the data. To me, that would not be my modal outlook." She went on to say, the Fed remains committed to ongoing rate hikes until the inflation data rolls over for a sustained period. That basic messaging hasn't changed, even though the Fed looks forward to stepping down from 75 basis point rate hikes. Well, based on that information, it seems probable that we might be seeing further rate hikes this year. The Fed's next session is planned for September 20th through 21st. I'll link the Fed's calendar in the description in case you want to keep tabs on this too. So are housing prices slowing down or are they falling? Based upon what we reviewed in this video, one might agree home prices are currently slowing down, but I don't think that's the full story. I think it's highly possible that we might see home price depreciation by the end of this year. I first mentioned this in my housing market predictions video earlier this year. The reason I believe housing prices will not only slow down, but go down by potentially 15% to 25% over the next 4 to 24 months has everything to do with how much home the median homebuyer can realistically afford versus the median sales price of a home in a specific area. To find out how much a median homebuyer can afford, I turn to the area median income earned in a specific region. Fortunately, Fannie Mae makes this pretty easy with their area median income lookup tool. I'll link it in the description if you want to check it out. For instance, the area median income for Las Vegas is presently $81,700. What's important to note is that's not the income per capita in Las Vegas. For reference, per capita refers to one person. The area median income is based upon a household income where a household is considered two income producing people. Currently, the median sales price of a home throughout Las Vegas Metro is approximately $409,900, as we can see on my real estate website, andrewfinneyteam.com. My website tracks real-time market data in Las Vegas in the Las Vegas Market at a Glance section. To get an idea of how much the median household in Las Vegas can afford based upon the area median income, I turn to NerdWallet's How Much Home Can I Afford calculator. It's pretty swift to gain fast insight by just updating the area, the income and debts, then modifying the interest rate to the 4.99% we saw in the Fed economic data chart earlier. Of course, that's assuming a buyer qualifies for that rate. The resulting amount is approximately $374,743 without overstretching affordability ranges. As you can see, a family would need to stretch the affordability range to purchase the current median price of a home in Las Vegas. Based upon watching this stuff in Las Vegas and nerding out on it in other areas around the country is why I believe housing prices must come down between 15% and 25% over the next 24 months to become affordable for most homebuyers. Okay, so that's what I think. The more important question is, how do you feel about the housing market and what do you think will happen with home prices moving forward? Okay, onto the brighter side of things. Did you hear that MIT engineers discovered a way to see inside your body? Perhaps that could be a bit scary or even freaky until you hear how they intend to use it to help people. The clever MIT engineers developed an ultrasound adhesive the size of a postage stamp that delivers clear images of the heart, lungs, and other internal organs. This will help cut the need for invasive procedures that might otherwise be needed depending on a person's medical needs. Personally, I just think it's incredible what we as people can achieve when we focus on a worthwhile goal, and especially when working together as a team. Great job, MIT. Keep crushing it. Okay, so maybe you're thinking through your options and wondering what you should do next. So click here to watch how the home buying process works, or click here to learn 5 effective strategies to sell your house. Either way, the choice is yours. I look forward to seeing you in the next video. Until then, I'm sending you positive vibes. Everything goes your way.